For more on the precious metal, I'm joined by Larry Shover. He's Chief Investment Officer at SFG Alternatives. He's there at the CME. So, Larry, gold has seen some solid support so far this year. What do you think are going to be the key drivers for gold prices in the coming months?
Well, I think the drivers are going to be the wholesale liquidation ending, and that's what we're seeing right now. I mean, that's what's caused a run-up on a string of bad data, and also the knock-on effect in rates. Let's keep in mind that in January, 10-year yields were 3%. Now we're at 2.73. There's been a reversal in real yields. So that in and of itself is going to cause us to digest and consolidate a little bit. But, Olivia, going further, I mean, we have to look at physical demand. I mean, it's been steady in China, not stupendous. India's been a driver and something most people aren't talking about. I mean, there continues to be this speculation in India that they're going to repeal that 80-20 import-export regulation, and that's caused premiums in India to fall quite a bit. So that's what's holding gold up right now. That's also what's making implied volatility at the COMEX drop and been dropping steadily since October.
All right, so what's your year-end target?
My year-end target for gold is about 1280. I just don't see it because at the end of the day, monetary policy in the U.S. is going to be the sword over gold's head. So I just don't see it. I mean, I could see it easily trading at 1360 and above on a short-term basis. But at the end of the day, monetary policy and a normalization of policy is going to drive gold's price.
Yeah, it's interesting. We also spoke to Jim Rogers earlier today, and he said a similar thing. He said he doesn't think now is the time to buy silver or buy gold. He thinks we are going to see a much bigger run-up, though, in agricultural commodities later on this year. So you're not bullish. You say 1280 is your year-end target. Where are we sort of, though, on the supply and demand side? Now that prices have come down so much, they fell 28% last year, the worst year for gold since 1981. So where are we right now on that sort of supply-demand equilibrium?
You know, the supply is actually really good right now, and inventory is quite stable. I do believe if we hit that 1360 area, you're going to uncover a lot of, like, lazy longs, people that were long the market that want to get out. And, I mean, if we have a substantial rise above that, then 1400 obviously will be the next point. But there seems to be a lot of good inventory or, uncovered supply at those price points. And we saw that last week when we broke through 1300.
All right, Larry Shover, Chief Investment Officer at SFG Alternatives, joining us there from the CME. Thanks so much for your thoughts on gold. You say 1280 is your year-end price target. We're going to be on the market.